All right, let's get right into it. Broadcom is about to face what I think is its biggest test of the year. Their earnings report is just around the corner, so today we're going to break down our pre-earnings analysis and figure out if this AI giant can actually live up to all the hype.
You know, the entire market is basically holding its breath for this September 4th report. So what we're going to do here is tackle the one question that's on every single investor's mind right now. Is Broadcom still the must-own AI stock for your portfolio?
So let's talk about this September 4th test. Look, we see this report as way more than just another quarterly update. It's a huge test of the company's strategy, its whole trajectory, and frankly, its sky-high valuation. Seriously, these results are going to set the tone for the rest of the year.
Okay, here it is. This is the number that everyone is going to be watching. $15.8 billion. That's our guidance for Q3 revenue. Whether they beat or miss this number, well, that's going to be the market's first and probably most critical reaction. It's the whole ballgame right there.
But to really get the stakes behind that number, you first have to understand just how much Broadcom has completely transformed itself. I mean, this is not the same company it was even a few years ago. It's a new beast entirely.
And you can see that transformation perfectly right here. Broadcom isn't just a chip company anymore, not by a long shot. Thanks to some massive acquisitions, a full 42% of its business is now coming from stable, high-margin infrastructure software. That's a huge deal.
And this is why we started calling them a full-stack AI and infrastructure powerhouse. What does that mean? Well, it means they provide everything from the actual silicon chips all the way up to the software that runs on top of them. It's a really smart strategic shift, and it's all designed to help them escape those classic, brutal boom and bust cycles you see in the semiconductor world.
And this changes the entire investment story. Broadcom has basically repositioned itself. It's gone from being just another cyclical chip maker to a foundational supplier. Think of it this way. They're providing the essential picks and shovels for the entire AI revolution. That's a much more stable and potentially lucrative place to be.
Okay, so with that big transformation in mind, let's get to the core of our analysis. Our bullish thesis for the company is really built on three key pillars.
So what are they? First, their dominance in AI infrastructure. Second, the strategic success of the VMware deal. And third, their just incredible free cash flow. These three things together, that's the foundation of our positive outlook. So let's break them down, starting with that AI story. Pillar number one, AI dominance. Get this. Our projection for their AI-related revenue in Q3 alone is $5.1 billion. That's just astonishing growth. And it proves that their custom silicon strategy for huge clients like Google and Meta is an absolute runaway success. All right, pillar number two, the VMware deal. We really see this acquisition as a strategic masterpiece. It was a game changer. Why? Because it gave the company this massive, stable software subscription base. That recurring revenue is the perfect counterbalance to the more up and down, cyclical hardware side of the business. And pillar number three, just look at this financial engine. The free cash flow has absolutely exploded. We're talking about a jump from around $11.5 billion in 2020 to what we project will be over $19 billion this year. And all that cash, that's the fuel that lets Broadcom aggressively pay down debt and keep growing its dividend for shareholders. It's a beautiful thing.
Okay, so that's the bull case. But look, a balanced analysis is never complete without looking at the other side of the coin, right? There are some pretty significant risks here that could challenge this whole bullish view, and we absolutely need to weigh them carefully.
And the first risk, it's kind of the elephant in the room, valuation. It's high, and it presents this really curious paradox. I mean, you compare it to its main AI rival, NVIDIA, a company that's growing way, way faster, and Broadcom's PE ratio is more than double. So why? That's a really critical question we have to ask.
And when you look at the hard data, it's clear. Broadcom is trading at a serious premium to its peers. Now, in plain English, what does that mean? It means the market has already priced in perfection. There is virtually no room for error. Any disappointment on earnings day could be a problem.
Okay, next risk factor, insider activity. So over the last year, insiders have sold a net total of over 2 million shares. And yeah, on the surface, that might look like a pretty big red flag, right? But there's definitely more to the story here.
Because with insider sales, context is absolutely everything. A lot of these sales are what we call automatic. They're part of these prearranged trading plans. You see the rule there, 10b51.
Insiders set these up way in advance, often just to diversify their own holdings or for personal cash needs. So it's not necessarily a sign they're bearish on the company's future. It's important to know that distinction.
And finally, let's talk about VMware again. While we think the acquisition is a huge strategic win for the long term, the actual transition, well, it's been a bit rocky. We're hearing about a lot of friction, some frustration from customers and partners as Broadcom switches everything over to a new subscription model. It's a classic execution risk, and they need to manage it very, very carefully.
So there you have it. You've got the 3 bullish pillars on one side, and you have these very real risks: valuation, the insider sales, the integration challenges on the other. So where does that leave us? What's our final call heading into this big report?
Okay, here's our verdict. We're calling it neutral to bullish. Now, why the nuance? Well, it reflects our fundamental confidence in the company's strategy and its execution. We believe in what they're doing. But it also acknowledges the extremely high expectations that are already baked into that stock price.
And this really sums it up. On the one hand, you have these undeniable strengths, right? The incredible AI growth, that diversified model with VMware, and just a fire hose of free cash flow. But you have to balance that against the realities on the other side. A premium valuation that demands nothing less than perfection and those real operational risks with the VMware integration.
And honestly, this brings us right back to where we started. Everything we've just talked about, the bull case, the bear case, the whole valuation debate, it all comes down to this one single event, the September 4th earnings report. It is going to be the ultimate test of this entire thesis.
And so this is really the key question we're left with, and the one you should be asking. On September 4th, are the numbers going to prove that Broadcom is firing on all cylinders and totally deserves its premium price tag? Or will even a tiny miss be enough for all those risks we talked about to finally take center stage? The entire market is waiting to find out.